Those of us in asset finance, we all know about how to price. We know how to build, pricing. We have the cost of funds, we have the operating costs, we have the margin, and so on and so forth. So it's very easy for us to build up an overall price. But when a customer is asking to pay for a piece of equipment by how many times they use it, trying to price for an outcome, it's a really, really difficult thing, and it's a massive risk that the industry sees. We talked to a health equipment manufacturer. They're making massive machines that cost many, many millions of pounds. And they're seeing a request now from health authorities and so forth, not to buy the machine, which might cost £10 million, but actually to pay for it by how many scans it does. The issue with this new model is that currently a lot of manufacturers are used to making stuff and selling it, and they may be selling it on a 3-year lease or a 4-year lease or a 5-year lease. At the end of that lease, it's a real trigger to do something about it, and the user of that equipment, if it's on a finance agreement, they may sell it themselves. So what's going to happen now as people move into servitization, there's really 3 key elements that need to change in the go-to-market strategy. And the first one is changing customer expectations. And I think about this as the Amazon effect. So we're all in business, but actually we're all private consumers as well, and we're all used to things like Amazon. So I talk about, customers are changing. They all want the Amazon experience. So if you're in a commercial world, you've got to remember, you've got to think about what you want out of your private life and actually convert that into your business life. Really important. There's also a big culture factor here as well, because if you've got a business with your own processes that are driven by people in the business that are used to making stuff and selling it, when you're actually changing your whole business model, you've got to question whether the people in the business can actually go with that journey, or whether you need to change the overall culture of the business and maybe change some of the people as well. So it's not just thinking about what's done in the factory, it's also the whole overall culture of the business. Again, going back to a manufacturing business that's used to buying stuff and selling it, if they're going to make it and customers are going to want to pay by use, when you think about it, that's a massive working capital requirement. Now, how that's filled, most manufacturers can't deal with that working capital request themselves. So that's a great opportunity for a lot of you guys in the room, whether you're a captive, a bank, a big bank, or an independent financial services company. There's going to be a massive working capital requirement being delivered by this new servitization economy. So everybody in financial services has got, depending on the size of your business, hundreds if not thousands of people in your risk department. They're all used to looking at cash flows and balance sheets and future projections and so on and so forth. And we're all really good at that, and we've all got built up many models over a long period that can deal with that. But actually this customer now wants to pay by how much they use it, and you're trying to look at how the customer has projected his business plans going forward to see whether his usage plans are realistic. That's a whole different set of credit risks, and a lot of us just don't have people in our businesses that can actually deal with those risks as well. So 2 very different financial risks that we identified.